We don't just build wealth, we build legacy. Welcome to the Retirement Income for Life show with Doug Vincent. For over 30 years, Doug has helped families right here in the DC area turn hard work into lasting income, helping you protect what you've earned, provide for your family, and retire on your terms. This is where preparation meets opportunity. This is the Retirement Income for Life show. Here's Doug Vincent.
The retirement countdown. Are you ready? 5 years away, 1 year away. On today's show, we're going to talk about what you need to do before you retire. Welcome to the show, and shout out to all the listeners in the DMV area, Washington, D.C., Maryland, Virginia. Hopefully, as you are listening and as you're preparing to retire, you're moving in that direction to get ready. Also, don't forget to listen to some of our previous episodes on our podcast, as well as our YouTube channel. Just go to Retirement Income, the number 4, LIFE, and you can find us there at YouTube. Also, our website, www.retirementincome, the number 4, LIFE.com. Don't hesitate to contact us with questions, or if you want us to help you with a free 100% no obligation consultation. We are here to help you with your retirement journey. And the best time to identify these gaps in your plans is before the problems arise. You don't want those problems to arise and then you're trying to fill those gaps. You want to fill the gaps before the problems show up. So reach out to us by phone, 301-242-3950. Of course, our website. Also, we have a free download. It's a Retirement Income for Life Survival Kit. All you have to do is enter in your information on our website. We'll send that to you by way of email, absolutely free. So today's show, we're going to talk about the 5 things to do 1 year before retirement. If you're retiring within the next 12 months, your retirement date will be here before you know it. And so we've got some practical steps that you should consider and that you should do now as you approach that great, exciting day of your retirement. All right, here is the second thing we'll talk about, because you have a little bit more time. If you have, 5 to 10 years for retirement, there's a checklist we'll go through. It's going to look a little bit different than if you got 12 months or so, but we definitely want you to start planning now. If you got 5 to 10 years out, you don't want to look into starting now and making sure you're pulling everything together. Okay. Also, we'll look at what we are seeing statistically today, why people are saving less in retirement. This is some new data that we've discovered, that Americans aren't prioritizing savings the way that they have in times past. And, times are hard, economic challenges we're facing, and, we'll dig into ways that you can prioritize that and why people aren't doing that. Then also, we're going to test your knowledge and go through some right or wrong questions that, we like to a lot of times separate the truth from fiction. And we'll go through that today as well as we go through today's show. All right. For our financial wisdom quote of the week comes from a comedian. Her name is Tina Fey, right? Whatever the problem, be a part of the solution. And she's not joking when she's saying this, all right? Just don't sit around raising questions and pointing out obstacles, okay? Whatever the problem is, be a part of that solution, right? Don't just point out the problems. Don't just point out the obstacles. You want to be a part of that solution. All right. 1 year from retirement. Okay, here's 5 things you should do right now. If you're getting ready to retire within the next 12 months, okay, and you are, in that position to where, hey, we want to congratulate you. You spent all this time saving and planning, hopefully, and you're in that final stretch, and you don't want to put things on autopilot at this last stretch of the way, right? In many ways, the decisions that you make in the last 12 months before you retire, they can have a huge impact on how comfortable or confident you feel when that full-time paycheck stops coming. Okay, so the first thing you want to do is focus in on, number 1, build your retirement income plan. Okay, What does your retirement income plan look like? Where is the money coming from? What paychecks are coming in based upon your pension, based upon Social Security, your retirement accounts? Are there investment accounts, annuities? Do you have the income plan mapped out that is going to have to replace what you have been used to with those weekly or bi-weekly checks? You've got to put that in place now before you walk out that door on that retirement date. Also, a withdrawal strategy. You want to create that, right? Decide which accounts you're going to tap into first, right? How much are you going to withdraw from each one, and put together a withdrawal plan that can help your money last, potentially for 20, 30 years. You never know, right? At the same time, you want to put in place some tax planning. Okay. You don't want to push yourself into higher tax brackets with money that potentially could continue to stay invested that you don't need for your monthly budget, right? Now, that budget that you are living on, you want to test that. Okay. You want to make sure your expected retirement income comfortably covers both your essential expenses, the lifestyle you've been looking forward to, your fixed, your variable, expenses. You want to make sure that you can test that and make sure that you have a comfortable retirement income plan before you leave the job. All right. Number 2, build up your cash reserves. Okay. You want to have money set aside, especially for those early years, 1 to 3 years of expenses, possibly in cash that you have right there. If it's not in cash, and conservative investments that you can access, while, let's say, the stock market went down, and, you want to cover your living expenses, and you're now in a position to where you're not used to this style of income distribution. Okay. And so you want to make sure you have a good cash reserves, set aside, because they're going to be unexpected costs. There are going to be some things that you dealt with your current income that now you're still going to have to deal with now a retirement income. Now, the unexpected, always shows up, right? Especially in those first few years of retirement, you never know. You might have healthcare expenses, or, hey, home projects that you want to do. You're sitting around, you're looking at the things that you want to have done around the house. This is an unexpected potential expense. Hey, what about travel? Okay, now you have time to do some of that travel that you weren't able to do while you were working full time. Also, what about some family members that might need help, right? You want to have a healthy cushion of cash that gives you the flexibility you need when life starts lifing and life is going to happen, right? So you think of this cash as a buffer, not as an investment. This cash on hand, right, is designed, it's not designed for you to get 10, 20, 30%. You're not trying to max out the returns, right? Something stable with this particular account. Let's call this your peace of mind money when the unpredictable shows up, which can often happen when you are a new retiree. All right. Number 3, review your Social Security strategy. Okay. Don't assume just because you turn 62 that you have to claim this immediately. Okay. You're eligible at 62. Okay. But many people retire, before they can, even before they reach 62, right? Before they can claim, some people can't claim right away. That may or may not be you, but the best choice is going to depend upon your health. How long do you think this money is going to last? Okay. It's going to depend upon what other income sources you have, your marital status, your long-term, goals. You want to look on the SSA.gov website and make sure you review your numbers from 62 when you are first eligible in most instances, your full retirement age, which is somewhere probably around 66, 67 for most of us. And then you could wait as old as 70. Okay. So why are you taking Social Security? When do you want to take it, right? You don't have to claim immediately, although you may want to, right? The other thing you want to do is verify your earnings history. Okay. You want to make sure the numbers that you see that are calculating how much benefit you're going to receive from Social Security. You want to make sure those numbers are right. This is human beings entering this information in, and mistakes can happen. Okay. You want to make sure that when you look at your earnings history, that it is accurate, because if it isn't, you want to make sure that gets adjusted, especially before you start taking that money, and you want to make sure it's calculated correctly. Okay. You want to look at the long-term picture. If you believe you're going to live to 100, the math says you should probably wait till age 70 or 69, or at least full retirement age. Okay. Now, if you're going to die early, in your early 70s, then 62 is probably the way to go. There is no right or wrong answer. We do not have a crystal ball on life or death. What we have to do is do proper planning to know why we're doing this and look at the long-term picture, right? Waiting longer to claim can result in substantially larger monthly benefits, which may be especially valuable if you expect that long-term retirement. And you want to maximize the survivor benefits also if you are married for your spouse. Okay, number 4, do some last minute tax planning. Take advantage of your transition years. Okay, do some tax planning. The period, let's call this a transition period, after you stop working, right? But this is before your required minimum distribution. You don't have to start taking out money from your 401k IRAs currently until age 73. That number is going to that age is going to quickly move to 75. But right now for you, if you're 73, then you would have to take a required minimum distribution. But if you are, in your early 60s, you may have 10, 12 years before this requirement, kicks in. And you're in a situation in these transition years that you can create opportunities to, by moving things around potentially, to lower that lifetime tax bill. Okay. At this point in time, you also want to consider a Roth IRA. Okay. Or a Roth conversion. Okay. What is a Roth conversion? Depending upon your situation, you could convert a portion or all of your traditional IRA to a Roth IRA. During the lower income years, this may help you reduce your taxes later on in retirement. If you do a conversion from your traditional IRA to a Roth IRA, you do have to pay the tax in that particular year with the amount of money that you moved. But if you have reduced your income and you have moved down to a lower tax bracket, those taxes that you're paying could potentially be lower now than later on in your lifetime, right? So you want to consider that strategy. It doesn't work for everybody, but you definitely want to have someone walk through that with you to just analyze it to see if that would be a good option for you. All right. Thirdly, coordinate withdrawals carefully. You want to coordinate the withdrawals that you take from these accounts very, very carefully, right? You don't want to push yourself up into a higher tax bracket just taking out money from places that money has gone in there pre-tax and has grown tax deferred. You need a strategy to make sure that is not pushing you up into higher tax brackets. All right, number 5, give your spending plan one final stress test. You're coming up on retirement. You got 3 months left. You got 6 months, 9 months. However long it might be, 12 months, is not a very long time. Okay. And you want to test that. You want to look beyond the monthly bills. Okay. You know what your monthly bills are, but you want to potentially budget in unexpected things like healthcare, travel, we've mentioned, home maintenance, cost of living and inflation, those large expenses can sneak up on retirees in ways that you would not believe. Test the possibility of you needing income, that you are, not expecting, right? Practice living on your retirement income also. Just practice living on that. Even before you leave the job, you know what your retirement income is going to be if you've planned it out and thought it through. Now, test that out for a few months. Can you live comfortably off of what your retirement income is going to be, in the near future? This is coming up very fast, right? And this particular practical exercise can reveal, adjustments you may want to make before you leave your job. Okay, so you want to go through that practice. It will be definitely something that, will be a good exercise for you. Finally, remember that retirement is flexible. Okay. Remember that retirement is flexible. Well, what do I mean by that? Your spending won't be the same every year. Okay. Your spending's not going to be the same in retirement every year. So you got to build a plan that can adapt as your needs and priorities change over time. You may do more travel early than you do later. You may do more in investing in your grandkids than you do, later on. There are a number of different things. You may be healthy, immediately, but then you might get sick. You never know what type of flexible, unexpected things may show up in retirement. And you're going to want to make sure you go through some stress tests, go through some hypotheticals, work through the flexibility of what we call retirement well before you even get there, at least months before. All right. So what's the bottom line? Retirement isn't just about reaching a finish line. Okay. Retirement, I pray for you, is a marathon and not a sprint. It's about successfully making the transition into a completely new phase of life. Okay. And spending a little extra time preparing during your final working year can help reduce stress, avoid costly mistakes, right? Give you much greater confidence once retirement officially begins. Okay. You want to take this risk of having to go back to work, or risk of running out of money, or risk of you not being able to handle the unexpected things that may show up. You want to take that off the table, especially if retirement is less than a year away. Okay. Or even just a few years down the road, right? This is a perfect time for some retirement analysis. A retirement readiness review, is what we're doing in our office on a daily basis. You want to make sure you evaluate that income. Okay. You have to have an income strategy. When am I going to take Social Security? What options are there for that? Right. When, should I be taking that based upon who I am and my unique circumstances related to that, single lifetime annuity, which is Social Security? What about the tax planning opportunities? Okay. Are there different tax planning that needs to be taken into consideration before you retire, along with your investment allocation? Is your risk tolerance the same as it was while you were in your 30s and 40s, now that you're potentially in your late 50s and 60s? Okay. You want to be able to retire with great confidence, and the greater confidence that, people are more confident and people have more clarity when they put these plans in place, when they put a retirement readiness plan in place. So give us a call, 301-242-3950. Visit my website, www.retirementincomethenumber4life.com. Set up that consultation. Let's get a retirement readiness review in place for you so that you can walk out that door, celebrate, and know exactly how those first few years are going to look. All right. Now, second group of people that I'm talking to today are those of you that have 5 or 10 years before you retire. Okay. 5 to 10 years before you retire. Now, here is what real planning looks like. This is where it should begin. If you've got 10 years, you've got time. If you've got 5, you got to hustle. You got to do some different things, but you still, have time, right? Last segment, it was people within 12 months. Okay. They don't have a few years. Okay. They're not a few years away from retirement. They really got to get busy now. Right. But you that have 5 or 10 years, before retirement, we want to refer to that as the retirement red zone. Right. You still got meaningful change time, right? Time that you can meaningfully make changes. Right. But you don't have a lot of time to recover from, major mistakes. Okay. You still got to get busy, But you want to, number one, start shifting your mindset from accumulation or 100% growth to now income. Okay. You've got to recognize now that your retirement goals have to start shifting, because what you are accumulating now needs to be protected, preserved, positioned so that this can produce income for you, once you stop working. During your working years, the focus is building wealth. Okay. We're trying to accumulate as much as we can. But as retirement approaches, the focus gradually shifts towards creating dependable income that can support your lifestyle for decades to come, right? You can't put every last dollar now towards growth, because if the market turns 30, 40, 50%, it may take, 5 years to recover, 10 years to recover. We don't know how long is going to take for the growth to come back, right? After years of strong market returns, it can be real tempting to just stay aggressive. Okay. But as retirement gets closer, protecting what you've built becomes just as important as continued growth. Okay. Start asking yourself some different questions, right? Instead of how much can I make? Okay. You may want to begin asking yourself, how will this money create a paycheck when I stop working? Okay. How will this money be a paycheck when I stop working? Okay. Most people don't think about that. Most people that I'm working with and that we're talking to on a weekly basis are only thinking about accumulation. It's time for a shift. Okay. Definitely if you're 1 to 12 months away, but why don't you start 5 years away? Why don't you start protecting your money now and shifting into an income mindset? I didn't say take all the money out of the market. I said now you must shift from just 100% growth to now growth and income. Number two, you may need to take some chips off the table. Okay. You may need to balance out your portfolio so it's well diversified with less risk. If you're 100% in the market, maybe now 70% is a good mix, or 80%. Some of you that are more conservative, maybe 60%. Do a review on your risk tolerance. Okay. Investment risk tolerance reviews are very healthy for people, especially as they get in their 60s and 70s, as you approach in retirement, right? Your portfolio needs to be set up for stability and sustainability over possibly 3 decades. Okay. It may now carry currently more stock exposure. Your portfolio may carry, a lot more stock exposure than it's calling for as you now, move towards this stage now where you're going to need income. So you're going to want to do some rebalancing potentially, right? Before the market forces you to rebalance because of a major downturn, why don't you take the initiative and potentially do some rebalancing on your own, which is simply gradually shifting a portion of your gains into more conservative or income-focused investments. This can reduce the impact of a major downturn just before retirement, right? It's not about abandoning the market, okay? We're not getting completely out of the market. We're not saying that. I'm never going to say that. It's about potentially making sure that multi-million-dollar portfolio remains impressive. Okay. You're impressed by the 1.1, 1.2, 2 million. Okay. But what really matters when you retire is that accumulated pot can now distribute monthly income. Okay. You don't want to put yourself in a position where that is not something that you can do once you move into retirement. All right. Fourthly, you want to build a balanced retirement portfolio. Okay. You want to build a balanced retirement portfolio. Okay. Your money has to be separated now into different asset categories, different places for lifetime income, some for long-term growth to combat inflation, some for unexpected expenses, as we've mentioned, some for those emergencies. While you are allowing your assets to grow and while you're allowing some of your assets to be protected, you want to also maintain adequate liquidity, right? guaranteed income strategies are not bad in retirement. We're not talking about all of the money, but some of the money for unexpected expenses, living, liquidity. You want to make sure that money is easily accessible when life throws you a curveball. We never know what might happen, so we don't want to not have liquidity if something unexpected, was to show up, right? Then you want to understand the trade-offs, right? Every investment has advantages and limitations, okay? It's important to understand fees, restrictions, and liquidity before making any changes, right? And so you want to give yourself time to make those adjustments. Because you have 5 to 10 years, you've got a lot of flexibility, okay? You don't want to wait to 12 months because you got 5 to 10 years to plan. So now's the time to start thinking about all the different options, make those difficult decisions. When you plan early, it allows for gradual change. You don't have to make drastic changes. You can gradually do this and spread out your tax strategies, your investment adjustments, your income planning over several years instead of trying to do everything all at once, right? The confidence that you need is going to come from your preparation, right? People often enjoy retirement more when they know their income plan is already in place before they leave the workforce. Okay, so the bottom line is retirement planning isn't just about accumulating the biggest possible account balance. It's about turning that savings into a reliable source of income that supports the life you've worked so hard to build. Starting this transition now 5 to 10 years before will give you more options and will often lead to better outcomes. So if retirement is still several years away, it's the perfect time now for you to build that retirement income strategy, not just your investment strategy, but that retirement income strategy as well. We can help you with that, evaluating your risk, identifying your income gaps, creating that personalized roadmap so you're ready for retirement long before it arrives. So give us a call, 301-242-3950. Visit our website, www.retirementincome4life.com. Schedule your complimentary consultation with us today. So why are Americans pulling back on retirement savings? Okay, in 2025, 2026, we are seeing Americans are pulling back on their retirement savings. So what do you believe the answer is to why that is happening? Okay. Number one, it's real simple, and I'm sure you understand this, that everyday expenses are winning the tug of war. Okay. The monthly bills are taking priority: housing, gas, groceries, healthcare, transportation, insurance. That long-term savings money is just no longer available in a lot of situations. Okay. And so because of that, retirement, that's becoming a tomorrow problem. I got to pay my bills today. Okay. And nearly half of workers say they're either deprioritizing retirement savings or simply just can't afford to contribute anything, because today's expenses have become so overwhelming, right? So the challenge isn't a lack of awareness, right? Most people understand this, that retirement savings is important. They're aware of that. They just don't feel like they have enough room in their budget because the monthly bills are taking a priority. Okay. The monthly bills are winning the war, and retirement is a tomorrow issue. So many people are cutting back on contributions, and some workers are saving, less. And recent surveys found that more than 1 in 4 workers have reduced contributions to their workplace retirement plans or borrowed from those accounts to handle financial emergencies, right? So emergency expenses, they're driving these difficult decisions, right? Whether it's expected or unexpected medical bills, home repairs, these day-to-day living costs are becoming very, very overwhelming. And so retirement savings is often the first place that we look for cash. And, hey, these small reductions from those contributions to retirement, they really can add up. And missing out on contributions today also means missing years of that potential compounded growth that you're looking for down the road. So, these are a couple of reasons that we're seeing, people pulling back, but also debt's becoming a big obstacle, right? Credit card balances are continuing to weigh on households, high interest rates on these credit cards are making it even worse. Okay. People paying 20% or more in credit card interest makes it much harder to build wealth. Okay. Wealth over time can't be built when you're paying so much in interest. And, this income that you're making, all it's doing is going towards servicing debt. It's no way you're going to build income working against the grain, build up assets and income. It's going to be very difficult, and so what we're encouraging you to do, if you can, is find the right balance. Finding that balance matters. Looking at what revenue's coming in, look at what expenses are going out, seeing where you can balance out the expenses, seeing how you can get rid of that high interest debt. And hopefully by doing that, this will allow you to not forget that you have to save for retirement, especially if your employer is matching a percentage of your contributions with free money. You cannot get a higher rate of return than free. Okay. You want all of the free money that your employer offers if they're offering a matching contribution to your retirement saving. Okay. You can't leave that off the table. Don't leave employer matching dollars behind. Okay. A company match is part of your compensation. Look at that as a raise that you got for free that you didn't even have to work for, but you didn't participate because you didn't make any contributions. Okay. This is a indirect way to get a raise. Okay. If your employer matches retirement contributions, contributing enough to receive that full match is one of the highest return financial decisions many workers can make. Okay. You don't want to leave free money on the table. Free money is hard to replace later. Okay. Even during difficult financial times, you don't want to leave that money behind. Trying to contribute enough to capture an employer match can make a meaningful difference over the course of a working career. Okay. Even if you have to reduce it. Okay. Even if you have to reduce, what you were contributing before, reduce it temporarily, get a portion of the free money. If push come to shove, right. It shouldn't be that you have to pull back. But if you really must, then, hey, you can always increase those contributions again. Okay. When your financial situation improves, you can raise up the percentages of what you had to reduce on a temporary basis. Right. So small steps, take those small steps, move forward. Don't let, it be an all or nothing, way of thinking. Don't let that get in the way. Right. If you can't save 15% today, save what you can. Okay. Consistency is often more important than perfection. Okay. Let me say that again. Consistency, often more important than perfection. If all you can do is 5%, do 5%. Okay. Focus in on what you can do and continue to do that consistently each and every time you get paid. And then, you can increase gradually, 1%, every 6 months or 1% a year or 2%, every 9 months. This can be a significant impact over time without drastically affecting your monthly budget. Okay. Look into this as a way of focusing on progress, not focusing on perfection. Okay. Retirement planning, it's a marathon. Okay. This isn't a sprint. Okay. Making steady improvements is far better than waiting for the perfect time to start saving again. Okay. I understand, and we deal with it on a, weekly basis, that this financial pressure is real. Okay. Cost of goods and services based upon the revenue that's coming in from many Americans. They're having to make difficult choices just to keep up with these everyday expenses. I get it. But even during these challenging times, okay, maintain some kind of connection to your retirement planning. Even if you have to make, as I've been saying, smaller contributions than you'd really like to trust me, over the long term, you will still reach your goal. So if these rising expenses have caused you to slow down or to stop saving for retirement, we need to talk. Okay, let's have a conversation about it. Let us help you build in some budget management, some strategies to deal with your personal financial realities. Today, tomorrow, these retirement goals you need to continue to progress towards the goals that you have, even when you are feeling overwhelmed. Let's talk it through. Give me a call, 301-242-3950. Go to our website, set up a consultation for us to discuss this matter right at our website, www.retirementincome4life.com. And so when you're ready to see where your retirement planning stands, okay, you've been listening to the show, and wondering whether you're truly on track. Okay. This is exactly why we do the show. This is exactly what we do on a daily basis. This is exactly how we can help you. And we get to know you. We get to understand what it is that you're concerned about, what you have accumulated and the goals that you have for your retirement. We look at your entire financial picture. We want to uncover any opportunities there are to create supplemental income, any blind spots that you may have missed. We want to look at your risk tolerance, and possibly taking risk off the table that are unnecessary, right? Looking into paying, real close attention to your tax planning, any retirement income gaps. And this will help you, and we can help you with a personalized roadmap. Right? It's our goal to provide a clear, easy to understand way of making recommendations to you that are tailored right to your situation, right? You can make this will help you make informed decisions. You'll be more confident going into retirement. And it focuses in on turning that accumulated savings into income. Okay. Retirement income for life has to be the goal once you walk out of that door from your employer, okay? Building wealth is important, okay? But trust me, retirement is ultimately about creating reliable streams of income that can support your lifestyle you've worked so hard to achieve. So we want to answer your questions, no pressure, no sales pitches, honest conversation, just designed to help you better understand your options and feel more confident about your future. So when you're ready and you want to put a plan together and then take action, because, hey, strategy is one thing, but implementation makes the complete difference. So a single conversation with us right here in our offices in Greenbelt. If you are in any of the states around the country that's not in the DMV area, we can provide a Zoom meeting for you, a fresh perspective on your retirement plan. So 301-242-3950, www.retirementinCome4life.com. Let us know how we can help you today. All right. So right or wrong, let's test your financial knowledge today, right? Is this right? Is this wrong? Okay. Let's test you today in your financial knowledge. So number one, from a fee perspective, ETFs, which are exchange traded funds, are far superior products compared to mutual funds. Let me say that again. From a fee perspective, exchange traded funds are far superior product compared to mutual funds. Is that right? Or is that wrong? That is correct. So ETFs are much more fee efficient. Okay, you don't have 12B1 fees, and they offer the same level of diversification, and their other benefits. ETFs can be traded within a trading day, while mutual funds must be traded between trading days. You can get in and out of ETFs on one trading day, but mutual funds, you lose some control on the buying and selling of the prices that you can remain in control with the ETF. So if your employer doesn't offer a pension plan, there's no other way for you to create a personal income stream that you can never outlive. ETFs is something that you want to consider. But I'm sorry. Let me say it another way. If your employer doesn't offer a pension plan, that's actually a question. Let me pause and back up on that. Number two, if your employer doesn't offer a pension plan, there's no other way for you to create a personal income stream you can never outlive. Right or wrong? That's wrong. Annuities allow anyone to protect and grow their wealth and establish an income stream they can never outlive. Fixed index annuities are tied to a stock market index, allowing you to get market-like gains without market risk. Your principal is 100% protected, meaning the worst you can do in a year is 0% growth. So even if you don't have a pension plan from your employer, you can create one of your own. And that is something that you want to understand, is wrong if somebody's telling you that. All right. Number three, right or wrong, the only ways to reduce your taxable income and get into a lower tax bracket are deducting your mortgage interest and taking advantage of tax credits. Is that right? Is that wrong? No, that's wrong. Anyone can reduce their taxable income during retirement by taking tax-free withdrawals from the only two types of tax-free investments, which are Roth IRAs and cash value life insurance. Okay, so anybody can do that, right? And if that's something that you're interested in, in generating tax-free income during your retirement, then I would encourage you to schedule the free consultation with us. We can look into Roth IRAs. We can look into cash value life insurance. It won't cost you anything, to find out, how much that will cost, or find out how much you could save, in future taxes. It's not going to cost you to do a consultation. All right. Here's another right or wrong question for you. If you choose to take a lump sum on your pension when you retire, you can receive a 20% bonus or more on your money. Let me say it again. Right or wrong. If you choose to take a lump sum on your pension when you retire, you can receive a 20% bonus or more on your money. That is correct, right? In most cases, that is correct. This will also help you generate a better return on your money. When you invest a lump sum into a fixed index annuity or something of the like, it can also generate a higher income payout during your 30 plus years in retirement. You want the highest payout that you can receive when you're in retirement. So just make sure you work with an advisor who understands the pros and cons of the products to determine if such a move is right for you. Okay, so you want to make sure that if you take that lump sum, that you've done the proper analysis to make sure that that was the right thing for you to do, and that you've set it up so that this money can last you, at a higher payout, for possibly 3 decades. So we'd love to meet with you and discuss some of these things that you may have considered right when they were wrong. And we help you reach your financial goals as we work through some of these questions and these concerns, retirement planning, risk management, estate planning, a whole lot more that we're here to help you build that sound financial plan, and, the listeners that are setting these appointments up, we're setting this up on a weekly basis. And we look forward to helping you if that's something that you need. All right. So let me give you here the top 5 reasons people meet with us. Number 1, retirement planning. Okay. If I had to sum this up in 5 reasons why people meet with us, retirement planning, it would be number 1. Okay. This retirement plan may need to last you 30 or 40 years. Okay. People are calling us each week, with their questions about budgeting, income planning, personal pensions, tax planning, healthcare planning, estate planning. You want to make sure you have that retirement in place. You want to make sure you've consulted with professionals that you've talked to. And, this is going to help you avoid or outlive your money. It's going to help you avoid mistakes. And furthermore, outliving your money. You want to make informed decisions on all the areas related to retirement income planning, Social Security decisions, healthcare costs, all of those things that are related to retirement income planning. You have to put those in place. And that's the number 1 reason why people meet with us. Also, Number two, they came into an inheritance or a windfall. Okay. You get a sudden influx of cash and you want this cash to last you longer than a lottery winner, or maybe you hit the lottery, right? You want to make sure that proper financial management is done, right? And how do I save? How do I invest? How do I put this in a position for financial stability for my future, for me, for my family? We want to make sure that we meet with you and meet with a professional like you to talk about that. Also, here's another reason why people meet with us, and that could be because you're buying or selling a home. Okay, that's another major financial decision that a lot of people make. Maybe you're buying a business or getting ready to start a business. Okay, maybe you're looking at a second property or something that you're going to add to your portfolio. People meet with us because when they're making major transactions, like these purchases, they want to bounce that off of someone for other financial considerations, right? Financial professionals like us can provide guidance on managing debt, managing down payments, right? Aligning your day-to-day goals with those long-term, financial goals, right? If you're a business owner, we can help you establish the right retirement plan so you can pay yourself first, right? Many business owners fail, or should I say fall into the habit of putting so much back into the business that they're not saving for their retirement future, or they're not planning the exit once you get to the point to where it's time to retire or it's time to sell the business. These are things that you should talk to professionals about. And we're talking to small business owners every day on transition, on defined benefit plans, retirement plans, and the like, something we're doing on a daily basis. All right. Another reason why people meet with us is just simply life transitions happen. People get married, people get divorced, they're switching jobs, they're switching careers. Making these decisions can have significant ramifications if you don't plan properly for these major life transitions. Okay, bounce it off somebody, get a second opinion like us as it relates to these situations. And other financial professionals can do it too. We do this on a daily basis, navigating these financial changes that come into people's lives. Estate planning issues, blended family issues. How is my financial security going to look? What is it going to look like with this major transition? Something that we talk to people about, all the time. So if you're going through, some sort of life transition, this might be a good time for a check-in on your financial health, realign your strategy with those overall goals that you've had, in the past. And now this is one of those situations where you may need to make some adjustments. May be good to talk to somebody about these decisions that need to be made with this transition. Also, here's another reason why we see a lot of people coming into our office, because they are newlyweds. Okay, starting a family. I'm just had my first child. I'm getting ready to have my third child. Okay. What does this look like related to planning ahead for, potentially private school or, starting college planning? Okay. Let me run this by you, because a lot of people don't know this, that the average cost, think about this for children that you are raising right now, or potential children that you are going to raise. The average cost of raising a child is $310,605 for the first 17 years alone. Okay, let me say that again. $310,605 before college, before the child goes to trade school, before they turn 18. You've already allocated $310 and you got 3 kids. Okay. And no financial plan, no financial planner, nobody you run this by. Okay. So this is something that I would urgently request you to start thinking about. Do I need to start putting away money for college? Do I need college savings that needs to balance itself out with my retirement planning? Okay. Even though you're trying to take care of children and maybe you have 10, 20 years to still work on this, but you're going to retire in 5 years. Okay. What are the financial needs for the family? Yes. But what are the retirement needs that you're going to have in the next 5 to 10 years as well? Do you see that the prioritization needs to look at all of these different places, not just retirement planning, not just family planning with your children? You want to make sure all of this is put in place, in what we've been talking about well before you retire. You got to consider this if you are getting ready to retire, right? You don't want, for those of you in your golden years, or moving towards your golden years. Okay. You don't want those tarnished by financial stress because the retirement planning wasn't working alongside with the college plan. Okay. You didn't put a retirement plan in place before you got to the point to where, man, I've only got 3 more years before I retire. Okay. And now, I'm in a position to where I'm stressing myself out, right? Even if you got a windfall, okay? Even if you came into a amount of money that could help you, with some of this, alleviate some of this stress. If you don't put the proper planning in place, you're still going to be stressed out. Okay. You're still going to make spending decisions that might hinder, you having that retirement that you are looking for. Retirement is a major transition, that takes place in your life, just like having more children, just like getting married, just like getting divorced, as we mentioned, buying or selling a house, becoming a new business owner. All of these things need to be taken into consideration with a solid plan, right? You want to be prepared with this plan in place well before any of this stuff, shows up. So give us a call, as I continue to mention, reach out to us, 301-242-3950. Go to our website, take a look at, our website and the things that we are offering, retirement income, the number 4, life.com. We are here to help you, every step of the way. And with our planning process, as I've said to you before, we talk about what's important to you. Okay. What retirement looks like with you in mind. Okay. The concerns that may be keeping you up at night, every plan needs to start with all of your goals, not products of a portfolio. Okay. Let me say that again. Your planning for retirement must be about your goals to have that dream retirement, not just products or what's in my portfolio. Okay. Your picture, your whole financial picture needs to be reviewed. Okay. Everything related to what you've accumulated all these years now needs to be reviewed and packaged into an income distribution plan that includes your investments, all your retirement accounts, the income sources that are going to be turned on immediately, those that will be turned on in the future, how taxes relate to this. Are you moving into a higher tax bracket? Are you staying in the same tax bracket? Are you going into a lower tax bracket? How much risk are you exposing your $1 million, $2 million, $500,000 portfolio to as you are now going into retirement? Okay. The strategies that you had in place while you were accumulating are not the same strategies that you need to put in place when you move towards retirement, when you get in retirement. There are different strategies for income and asset preservation. There are opportunities there for you. There are blind spots that we need to cover up. Taking the risk off the table, creating that personalized roadmap is the goal that provides the clarity, right? It's easy to understand once you have the clarity and the recommendations tailored to your specific situation. Okay. Informed decisions take the stress away and create the confidence. Okay. So those questions need to be answered. Okay. We provide a no pressure, no sales pitch consultation for all of our clients. We have an honest conversation that's designed to help you better understand all your options so that you feel more confident about your future. Okay. And like we've been saying, if you've got 12 months left, you got to get it done now. Okay. If you are approaching retirement, you've got to take action now and get this implemented so that once we've had these conversations, once we've discussed this, you've got clarity, you've got confidence, you're going to go into retirement with a fresh perspective on your plan and that you can execute well and for decades to come. So we look forward to helping you with all your retirement income planning needs.